Hi, this is Chris Condon with John Green Commercial and Industrial RE Advisor. Want to take a couple of minutes today here to explain how exactly a broker determines an appropriate list price or a value for a property, for an industrial property here in Will County. First step in that process is really review the trends. What's going on in the marketplace? Are prices rising or falling? Is inventory rising or falling? What's kind of the average time on the market? Those trends will kind of indicate how aggressive you can be on pricing or not. So in today's marketplace, we're looking at definite upward trend in pricing here. We've seen pricing go from an average of probably around $45 a square foot to, today or so, we're probably $65 a square foot, maybe a little bit more. Definitely an upward trend here. If you're looking to push pricing, you can certainly be a little bit more aggressive based on the trends here today. What's going on with inventory? Currently, inventory is definitely in a downward trend. Inventory is about a third of what it was over 3 years ago or so here. We've got about 40 properties or so on the market under 100,000 square feet in today's marketplace here. Kind of the same trend with time on market. We've seen it go from around an average of 15 months, about a year and a quarter, down to on average about 5 months or so properties are selling this time of the year in the marketplace here. So the next thing to consider is what exactly are your objectives? Is there a certain price that you're looking to hit, no matter how long it's on the market? Are you looking to minimize time on the market, get your property sold in the next 3 to 6 months, or somewhere in between? I think really understanding what your objectives are and if they're realistic for the marketplace today is certainly one of the other starting points here as we start talking about pricing on a property. There's basically there's three ways to approach pricing a property. Probably only two are the most relevant here for existing properties that will be going on the market for sale. That's the comparable sale approach and the income approach. Based on comparable sales, this is a property that I had sold recently here in Shanahan, industrial condo building, about 11,000 square foot building, a little bit of office. As we were approaching this, trying to determine a value, really looked at what comparable sales are selling for here in the marketplace. Did some research on one of the services that we use, came up with around 6 comparable properties. Prices range on this from $49 a square foot to around $87 a square foot. Another couple sold here, $32 to $55 a square foot. So it's not an exact science. It's as much of an art, especially with such a wide range in pricing as this, from $32 a square foot to $87 a square foot. That's quite the variance, but certainly a way to start narrowing down what exactly it is. The other approach is going to be the income approach on this. So what have comparable properties been leasing for in the area, and the kind of backing into what type of a rate of return that an investor could foreseeably get on such a property. So same building, 11,000 square feet. Market for industrial leases today are between $8 and $9 a square foot for a building like this. So realistically, it should generate around $99,000 in gross income based on the taxes, the insurance, some of the proposed maintenance on the property. That's probably going to net out around $73,000 a year. At a 10% cap rate, that would put the approximate value at around $730,000. So once again, it's kind of a combination of the income approach and the comparable sale approach to come up with an appropriate value. And it's, like I said, as much of an art as it is a science. The art side of it is, what are buyers' opinions of the market? What banks are financing these types of properties, and what type of values are they determining? Value is very much a personal thing, and each person's going to see a property differently. So kind of bringing all that information together to get an appropriate value is critical. The last approach to valuing a property is construction cost approach. For existing buildings, not too terribly relevant, quite honestly. Kind of difficult to find that value and then depreciate out. Kind of the depreciated value on that property, not very relevant, but certainly something to be aware of. If you're buying an appraisal or having an appraisal done on a property, it's certainly factored into an appraisal, but on the resale market, not necessarily as accurate or valuable. So I hope you found this helpful. If you have any questions, or there's any way that I can help you, or you need information specific to a property that you're thinking about selling, happy to help however I can. Just give me a call and let me know how I can help. Once again, Chris Condon. I'm with John Green Commercial and Industrial RE Advisor. Have a great day.